Okay, thank you very much. Okay, first and foremost, allow me to thank Syed for inviting me to moderate this much talked topic, COVID-19, the impact to Islamic finance. Everybody's talking about COVID-19, the impact on the industry, the impact on the even on your daily life. And I think by virtue that it's been introduced, all the speakers, and I think without further ado, allow me to invite Tuan Syed Alwi to basically just give a short presentation on how the health crisis evolved into an economic crisis. On that note, please, Tuan Syed Alwi.
Bismillahirrahmanirrahim. Assalamu alaikum warahmatullahi wabarakatuh. Ramadan Kareem to all listeners. Thank you, Brother Zakariya, for moderating this session, and thank you for the opening question. It gives me immense pleasure to be part of this session and amongst an illustrious panel of co-speakers. Regarding the issue of how this health crisis has evolved into an economic crisis, let me start with a few fact checks. Number one, the coronavirus pandemic was first discovered on 30th December 2019, but was only declared a pandemic by the World Health Organization on 11th of March 2020. Subsequently, governments around the world started hibernating their economies through lockdowns and movement controls and circuit breaker measures only around March. So we have not had enough data to declare an economic recession. A recession is typically recognized when an economy experiences 2 consecutive quarters of economic downturn or negative growth. So I just wanted to share some slides. Give me 1 second here. So I will share with you a couple of slides. Did you get the slide?
Yes.
Okay. So slide 1 shows the downward spiral of global trade. China, Japan, and emerging economies in Asia all showed contraction in their production and trade volumes. So as governments take measures to contain the virus and hibernate the economies, factories and industries have shut down. This has had a negative impact on aggregate demand and thus reduced spending across the globe. This is why the global trade is declining. Slide 2 shows the free fall of the Purchasing Managers Index, or PMI, for major trading partners of Malaysia. A reading below 50 already shows a declining economic health across several economic fundamentals, such as production levels and employment levels. This chart shows a dramatic decline of the PMI across all 4 major trading partners of Malaysia, such as China, EU, US, and Japan, which inevitably will lead to a decline in manufacturing industry in Malaysia, which is what I'm going to show as the next slide. So slide 3 shows the PMI level in Malaysia. The chart shows that Malaysia's PMI index has been recording a decline for the past 3 consecutive months since January 2020. If you can look at the downward red arrow, that shows that since January, the PMI level has been reducing in Malaysia. And the sentiments among manufacturing sector is lowest since 2016. Now, Malaysia's PMI index in March 2020 was 48.4. A level at 31.4 would mean zero annual growth of the GDP. So the PMI is an important indicator of the economy as a whole, and not just the manufacturing sector. This indicator will tell us how close we are to a recession or otherwise. So, Zakariya and listeners, while the coronavirus crisis did not start as a financial crisis, it was just a small health outbreak in a provincial city in China. It may well morph into one of systemic severity and probably into an unprecedented economic crisis of brutal proportions. The reason for this is because of the draconian measures taken by governments to contain and limit the spread of the pandemic, such as lockdowns, movement controls, social distancing, travel restrictions, cancellation of public events, and so on. This hibernation of the economy has had a serious effect on businesses and business ecosystems. I will conclude with this remark. As long as there is uncertainty on containing the spread of the virus, which has already claimed close to 200,000 lives worldwide, we cannot forecast how deep the economic crisis will be. The impact of the recession ranges from negative 2.2% as predicted in Malaysia to negative 25 to negative 30% in countries like Japan, Germany, Spain, and UK. IMF predicts that this crisis is likely to surpass the effects of the global financial crisis of 2008. So a recession is imminent. It is important now to prepare and strategize on how to cushion the blow.
Does that end your presentation?
Yes, thank you. Over to you.
Okay, thank you very much. Okay. I like the point when you raised saying that the time is too short for data collection to actually determine that this is actually a financial crisis. Well, it started out as a health crisis, okay? And to say that it's a financial crisis is yet to be proven by the numbers, right? Okay, you also try to compare this scenario with the global financial crisis, right? Okay, remember when financial institutions came in, the financial crisis, they were really totally bad. Whereas in this case, they came into the coronavirus pandemic much stronger than when they went into the financial crisis. So do you think that moving forward, will the capital and liquidity buffers where they are quite strong, or I would say that they are strong now, be sufficient for them to go through all this most dramatic economic crash in history? So in other words, can they actually withstand the impact? Tuan Syed, maybe you can just as a follow-up to your presentation.
Sure. Very good question. I think you are spot on. Again, let me clarify and let me reiterate that we don't exactly know how severe this economic crisis is going to be. So let me make a disclaimer upfront that any form of forecasting is like shooting a moving target blindfolded. So having said that, after almost 2 months of economic hibernation, banks don't seem to be in any major risk of a collapse, both in Malaysia as well as banks in most of the developed nations. They are still quite protected by the strong buffers that they have built over the years, especially the buffers that they built in the aftermath of the global financial crisis. This will help to mitigate the impact of any deterioration, and there is going to be a deterioration in asset quality. Now I'm going to show one more slide here. Let me just, you get that? Now this slide shows is a presentation by Bank Negara recently on the annual report. In Malaysia, so I will share some examples in Malaysia.
I'm not able to see the slides. Okay.
How about now?
Yes.
Right. Okay. So this is the slide that talks about the stress test that Bank Negara performed for financial institutions in Malaysia as a case in point. Yeah. So in Malaysia, the total capital ratio of the Islamic banking industry is around 18%. This slide shows the total capital ratio of all banks But when you look at the Islamic banking industry, the total capital ratio of Islamic banks is also around 18%. So Islamic banks in Malaysia have a combined total capital of 70 billion ringgit, which is way above the minimum regulatory requirement of 8%. For the record, in 2013, when the Basel III capital ratios were first implemented, the total capital of Islamic banks in Malaysia were at 27 billion ringgit. And now it is 70 billion ringgit. And the total capital ratio then was around 13.8%. Today is at 18%. So this shows that you are right. Your point is right. Islamic banks and the banking industry are coming into this crisis in a much better position because of the buffers that has been built over the years. Now, again, on this slide, the scenario analysis shows simulations which are more severe than the global financial crisis of 2008. In a scenario event of an economic depression where the recovery takes an L shape, if you look at scenario 2, that's what we call an L-shaped recovery, and returns to pre-crisis levels only, say, in 2023. The stress test shows that the total capital ratio will decline to 12.5%, which is still higher than the minimum capital ratio requirement of 8%. However, in such a scenario, the smaller capitalized banks, especially the standalone Islamic banks in Malaysia, or other banks that do not have a strong shareholder base, may face difficulty. So there may be some distress among Islamic banks, the smaller ones, but this is not likely to be systemic in nature to the financial market. So what you said earlier is very true, that the banking institutions are in a much better position now than when they were back in 2008 during the global financial crisis. But bear in mind, financial institutions, including Islamic banks, are financial intermediaries, and in simple words, they play two key economic roles. Number one is the safe custody of deposits. And number two is to allocate that capital and funding and deposits to the productive sectors of the economy to create economic growth. That's the basics. Yeah. However, in playing the financial intermediary role, banks also perform what is known as maturity transformation. They borrow and take deposits in the short-term tenor, and they lend and offer financing on the longer-term tenor. This is how banks make money. So it is crucial that banks continue to excel in these two basic banking functions: mobilize deposits and continue to channel the funds to companies, businesses, and individuals. If they lose sight of these functions, they may create a more serious and potentially systemic economic risk. So for now in Malaysia, we can see that banks are playing their role in disbursing the government relief funds to the respective target segments. But beyond that, banks must also consider as a moral and social obligation to continue to fund the broader segments of businesses and commercial enterprises and micro enterprises and get money flowing to the economy. If they impose very high and strict conditions of approvals and stifle the fund flows to the economy, create a systemic risk to the economy. Why I say this is because by creating very high standards of credit underwriting, they may create defaults, resulting in lower asset quality, increasing the credit cost of these banks, and eventually resulting in higher provisions, which will result in loss of capital. So one good news is that the Basel Committee recently has advised central banks to allow some flexibility and adjustment to the implementation of the expected credit loss model of IFRS 9 during this crisis. And this is averting a potential aggravation of the economic crisis. Now, a very quick background on the ECL model, the expected credit loss model. The ECL model has helped to build banks to be more resilient, as banks are expected to provide provisions much earlier than the credit cycle rather than only when losses have incurred. So they have stage 1, stage 2, and stage 3 buckets that they can provide the provisions, which is providing much earlier before the actual loss happens. But in such a pandemic, the ECL model may stifle fund flows into the economy. And that is why Basel Committee has already allowed the ECL to be relaxed temporarily. So in summary, and my final remark, Islamic banks in Malaysia are quite far away from being affected by this coronavirus crisis, but they must remain vigilant and focused on ensuring their liquidity and deposit buffers are resilient. And they have to avoid a self-fulfilling prophecy of creating a credit crunch and avoid credit tightening measures and continue to get money flowing into the economy. Back to you, Zakariya.
Okay, that's a very, very positive thinking about the epidemic. Okay, I think let's talk to the banker himself. Okay, Safri, based on the statistics, it says that the Islamic banks has the capital ratio of 18.3%. And well, in general, the total bank accounts almost 15%. And do you think that moving forward, that the banks can actually maintain this so-called financing loss buffer? Speaking from your experience as a CIMB.
Yeah, Assalamualaikum warahmatullahi wabarakatuh. Bismillahirrahmanirrahim. Extremely delighted to be here today alongside distinguished panelists. Tuan Syed has touched on so many of my points on a beautiful Monday. So I'm just going to pick up on some of the points that Tuan Syed has not touched on before he pass the baton back to Tuan Syed. But before we get to the question, Saudara Zakariya, let me remind everyone, myself included, that we are all in uncharted waters. Tuan Syed mentioned unprecedented, I think, a couple of times. So this is really unprecedented times for all of us. Some even tried to compare this to the past crisis that we've seen. Most of us have gone through at least 3 crises, including this one. The Asian financial crisis back in the late 90s, the global financial crisis about a decade and 2 years ago. These are all, different level of crisis. One was due to the currency devaluation, the collapse of the currencies in Asia. The other one was due to the subprime mortgage issue in the US. This one, instead, is a totally different, I'm trying to find another word, right? Apart from unprecedented, phenomenon or unexpected phenomenon today. And to put things into context, just to put things into context, the government of Malaysia had to intervene and announce a Prihatin Rakyat economic stimulus package. It's a financial stimulus package for the non-Malaysian participants tuning in today, totaling 250 billion Malaysian ringgit. And that is equivalent to 17% of our GDP. And just to compare to what the government did some 12 years ago, back in 2008, at the height of the global financial crisis, the government had announced a 67 billion ringgit stimulus package back then, and that was equivalent to 8% of our GDP back then. So that is the magnitude of the 2 different crises that we are seeing. So coming back to your question, Saudara Zakariya, one of the many measures introduced under that 250 billion stimulus package is the deferment of loan or financing for a period of 6 months, which is meant to ease the cash flow of individuals, SME, commercial, and corporate customers. This, to bankers such as myself, provides a stopgap measure to customers, especially those affected by the pandemic outbreak. This also affords the customers with some breathing space whilst they struggle to navigate through this storm. The deferment or financing moratorium, as it is called, will also help provide some degree of stability and certainty to the banks. Just going back to the point that Tuan Syed mentioned on the relaxation of the ECL provision. So this 6-month moratorium does provide some degree of stability to the banks, where repayment, the provisioning level, the credit quality, is concerned, it will be sustained and will be to some extent does not create any negative or adverse impact to the industry or to the market. So what the banks are doing currently, they are taking this opportunity to be closer to their respective customers or clients to better understand their customers' business and the extent or severity of the impact of this COVID-19 to their businesses, and which will inevitably help the banks to come up with plausible workout solutions in the near to medium term. So we have some time to play with, so this KYC or know your customers tagline for the banks are so relevant, are most relevant now than it was relevant in the past. So for now, what it is important for the banks to put the mission first, and that mission is to ensure stability across the various segments, from consumer to business banking to SME banking to commercial banking and even to corporate banking customers. The key words here are to calm everyone down, to provide and to ensure stability. So by doing all this, inevitably, the banks will be able to proactively monitor their asset quality, which will have a direct impact on their earnings and profitability. Just coming back to your earlier question as well. In fact, just to echo Tuan Syed's earlier point, Malaysia, banks in Malaysia are amongst the best capitalized banks, not only in the region, but also globally. So I don't foresee a major impact on the credit ratings of Malaysian banks, with the exception of maybe there will be some changes in the outlooks for some of the banks. And as I said, banks in Malaysia, because of their level of capitalization, the high level of their capitalization, we are in a much better state than ever to weather the storm. And in addition to that, Bank Negara Malaysia, the Central Bank of Malaysia, has been extremely forward-looking in coming up with pertinent measures to ensure that the functions of the banks, the FIs, remain intact. The access to financing continues to be available, and banks remain focused on supporting the economy during this unprecedented or exceptional circumstances. So some of the measures, I'm just going to take a pause after this, but I'm just going to mention some of the measures that have been announced by the government and Bank Negara Malaysia, include the relaxation in the prudential buffers, where banks are allowed to basically operate below the minimum LCR of 100%. Banks are allowed to draw down on their capital buffer. The minimum NSFR, the net stable financing ratio requirement is going to be lowered to 80%, even though the NSFR is set to take effect from July this year, and many other measures that Bank Negara have announced in the last few weeks. So Bank Negara has also committed that they will continue to provide daily Malaysian ringgit liquidity facility to banking institutions to meet any of the liquidity shortfall during this period. So my last point before I take a pause, Zakariya, so all these measures, if I can recap, will certainly help the banks to sustain and maintain their capital position way above the regulatory requirements. So that is a plus point for the Malaysian banks. And one last point, Bank Negara Malaysia has also allocated a reasonable time period for the banks to rebuild their buffers way into Q3 of 2021.
Okay, thank you very much. It's very lengthy. Okay, it's just that the relief measures of one of them to include the request to defer or restructure, especially the corporate. Okay, moving on, we look at this unprecedented relief measures. So my question is to Dr. Engku, and I'm sure by virtue that you have changes in terms of the terms and conditions, will there be any conflict or will there be any changes in terms of the Sharia contracts in the existing contract, in the document? And how do you see that from the Sharia compliance perspective? Dr. Engku? Hello? Is Dr. Engku online? Sorry, I can't hear you.
Can you hear me?
Yeah, okay, now better.
Okay.
Yes.
Because I was trying to unmute myself just now, but it just said that the host has to unmute me.
I see, okay.
Okay.
So you get my question earlier?
Yes, I get your question. Okay.
Yes.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Firstly, I would like to thank the moderator and also the other panelists for having introduced and started the discussion on this topic. It has been very interesting to listen to the moderator, Dr. Alwi, as well as Safri just now. So I think the question that was posed to me is with regards to the moratorium and also the option for corporate clients to have restructuring or rescheduling with Islamic banks. So it's more focused on one of the relief measures which has been allowed by the central bank to benefit the customers of Islamic banks and also for the banks in general. So like Safri was saying, and also Syed was also saying that this is to allow for some kind of breathing space to the customer while they are facing this trying time of the COVID-19 and also the MCO. So now the issue is whether this exercise of giving the temporary 6-month moratorium to the clients would have any Sharia compliance implications or not. So I think there would be a two-pronged answer to that. First is the simple answer, and the other one is more complicated answer. So the simple answer is basically if the 6-month moratorium only results in a form of rescheduling of the facility, that means the bank is not going to add any additional pricing on the facility, regardless of the moratorium. So meaning that the bank actually has sufficient buffer or profit margins that can carry through for the whole 6 months, and the bank need not to increase, for example, the rental payment, does not need to increase the profit portion under the Rabiah sale contract. So what the bank do is just maintain the original selling price, maintain the original rental, and the bank just allow for a rescheduling of the facility, meaning instead of you having to pay, let's say, over 5 years, now we have moratorium 6 months, so the customer is going to pay over 5.6 for 5.5 years, meaning 5 years and 6 months. So just extending the time, but there's no additional charge or additional payment that the customer has to bear. So that's quite simple. So it's a mere rescheduling facility. So that's the ideal. And that's, I think, the understanding that most customers are expecting. Okay. But along the way, we have also received feedback from some banks that in some of the facilities, it may not be possible to just reschedule because of certain costs that they may incur. So they may find it necessary to restructure or to revise the pricing mechanism. So this is something that is now currently, I think we are listening from the banks and also from the other banks, commercial banks as well. So the issue here, will this be possible? Will it be Sharia compliant to further revise the rental or the selling price after the contract has been entered, after everything has been finalized? Now, I will just give general rules on this because as I'm speaking, the Central Bank Sharia Council has not come out with the finalized resolution on this. So I'm just going to give a general guide on this. I don't want to jump the gun with the Central Bank. So basically, the main rule is one, we look at the circumstances of the customers themselves. I think for corporate clients, corporate customers, we are not expecting these corporate customers to be in severe financial hardship, because I think one of the requirements under the moratorium and also the relief given that these customers are solvent. They are basically performing. They are not non-performing clients. Okay, so they are performing. So they are in a good financial situation. So basically, if they are coming to the bank, basically if they are actually not really having a real financial distress, they are still solvent. So the moratorium is more to give some kind of breathing space during the temporary cash flow hiccups, but they still have enough assets, everything is fine. So then there is more room for us to actually allow for the parties to renegotiate. So that's why for corporate clients, we allow the bank to have negotiation with the client. So it's open to the client to go to the bank to have an optional restructuring of the facility when the parties feel that there is a need to revise the rental or a need to revise the selling price and things like that. So in this situation, for revision of rental, they don't need a new ijara contract. What they need is just both parties agreeing at the new rental rate with a new tenure. But if you're talking about a murabaha facility, then you will need a new murabaha contract with a new selling price with a new tenure. So this is for corporate clients who are in good financial condition, are not in a severe financial sense as is solvent. Now, we're talking about individual and SMEs where they have this like automatic moratorium. So it's not like the corporate. So the bank will actually automatically give this moratorium to them. So if the bank only wants to have rescheduling, it's fine. But if the bank feels that there is some restructuring needed, again, we look at the position of the customer. If they are solvent, they are fine. If they're not solvent, if they are under real financial distress, basically the price cannot be further added on. Okay, so it has to be stick to the original pricing. But if they are also financially capable, so they can renegotiate with the bank, and the bank cannot actually just impose a new pricing rental without consent of the customer. So they need to have consent of the customers to enter a new agreement to revise the selling price, and in the case of rental, to revise the rental.
So basically, the bank will get in touch with the individual customer to get a consent in terms of any changes or whatsoever.
Yes. So no changes can be made without express consent of the client.
Okay. So I like the point when you raise that they will not be affected despite the extension or shall we call it, the whole tenure of the whole facility. Is it meant for corporate only, or does it include individual?
I don't get the first part of your question. What were you saying just now?
Sorry?
I don't really get the first part of your question.
You were saying that when they basically reschedule, when the rescheduling happened, so it's more of like a prolonged period of repayment. And you were saying that customers will not be affected by the prolonged period, in the sense that you will just like a holiday period for that without any additional charges. So does that apply to both corporate as well as individual?
This can apply to both. It depends on the bank's ability to absorb the cost during that period, because this depends on the original profit margin that the bank is putting on the clients. So some banks, they have quite a buffer in the profit margin, that even if the period is prolonged, they will not be in a negative position in that sense, even if the period is prolonged for another 6 months. But if the bank is already taking a very thin profit margin and the period is given, so it may adversely affect the bank's financial health, in the sense that maybe they will experience negative spread and things like that. So in this situation, the bank may want to renegotiate the pricing with their clients, and they cannot afford to do a mere rescheduling, and they will want to do a kind of restructuring with the clients. So this is when they have to reach out to the client and have further discussion.
And one more point, you're saying that it depends on the bank. So you're saying that this is discretionary in the sense that if the bank decides to do the rescheduling, they may do so, provided they have the buffer, or if they're not, they may not proceed with the rescheduling.
I'm saying that this is more of call of the bank, because the bank's position as the creditor in this situation, because the client is under the obligation to pay to the bank. So, and from the Sharia perspective, the creditor has the right to claim on that obligation. So it is the call for the creditor to decide whether to waive that right or to insist on that right. Okay, so in this situation, because the bank is the creditor, whether the bank is willing to give the extension of time, and then whether the bank still can afford to take up that cost during that 6-month period. So that's what I'm saying, is the bank's call. But it's not like arbitrary, like the bank cannot impose additional charges if the customer is not consenting to it. Okay, so there's a two-way street there.
I see. Okay, thank you very much. Okay, again, on the Sharia Advisory Council, according to the resolution of the SEC, any new legal document to capture every variations of terms and conditions is required in any rescheduling or restructuring of Islamic finance facility. This is due to the fact that Islamic finance emphasizes on mutual consent for contracting parties. With this in place, okay, I know, while this actually translates into more businesses to the legal firms actually producing more and more contracts. So this question is to Megat. So in your legal practice experience, do you think that these documents will be timely in place, in the sense that by virtue that there's so many rescheduling, there's so many restructuring, and of course the lawyers are needed to have these documents to have in place. So with this, especially with the environment of the MCO, do you think that legal firms are able to cope with the new contracts, new documents? Megat. Megat, are you with us?
Hello. Yes, can you hear me now?
Sorry?
Yes. Can you hear me? Yeah. Because just now I think the organizer had muted me, so I'm unable to unmute myself.
Okay. Yes.
Anyway, first of all, thank you.
My question is, you get my questions?
Yes, I did. Yes.
Okay.
Okay. Well, okay. First of all, thank you for the moderator for hosting the session, as well as the panelists for giving their views on this, and also thank you, Sir, for organizing this webinar for today. Going back to the question that you've mentioned relating to documentation, in terms of how that works in the context of the rescheduling and restructuring, maybe I could highlight why you need documentation in the first place from the legal perspective. And from the legal perspective, you need that simply to make sure that all parties are clear as to what are the terms. Okay, that's the main idea. So having the agreement written, having document written, making sure that the terms are clear to everyone is important. So that's one objective. The other objective is that in the event of any dispute and any particular issues in relation to the terms, the document or agreement provides a basis for looking into what the parties have agreed. So that helps in determining any particular disputes that may arise. Then the question would be whether the same principles would apply to banking documentation. They would. You need to have an agreement in place to evidence the particular financing transactions entered into between the parties. So that's why you have the relevant documentation agreement for financing. In the context of rescheduling or restructuring, I think to some extent, I would echo what Dr. Engku Rabiah had mentioned relating to the need for rescheduling, where there's no change in the payment amounts, there is no need for any additional documentation per se. And that normally requires notification on the part of the bank to the customer saying, hey, look, you're supposed to pay, say, in April, but now you're paying in October. So that is a notification will be sufficient. In addition, what you may also note is that, especially when it comes to financing documents that are based on the standard template or standard documentation, and that is typical for documentation for retail customers, in particular for individuals and SMEs, you find that there are a number of flexibilities that have been given upfront by the bank to themselves in terms of changing some parts of the agreement. For example, in terms of determining time for payment of installments, determining what would be the effective profit rate and what would the impact would be on the customers. Usually you find that these particular changes, which are not major, may be done by the banks by way of notification. That's normally embedded in the documentation for retail customers. So on that basis as well, you find that when you come to a situation of a pure rescheduling, there is no need to do a separate documentation agreement. Okay, all that is obviously subject to Sharia requirements. Obviously, for example, if you have a Negara transaction and then the deferment involves an additional time, then obviously based on Sharia principles, you have the obligation on the part of the lessee to pay the rental for the period in which he enjoys the use of the asset, or the manfaat or the usufruct. So obviously that would also involve some consideration as to whether a documentation will be required for the purpose of determining what will be the additional ijarah or rental to be payable for the additional period, because there's been extension of the period. So to some extent, that's also driven by Sharia considerations. But in terms of pure rescheduling, typically there will not be any particular need to have a document or agreement in place. When it comes to restructuring, however, that typically involves something a bit more major. And typically that would involve a need for some documentation or agreement. And into that extent, that is similar to the Sharia requirements, whereby if, for example, the contracted price would not cover the payment obligations that would increase due to the moratorium, then you may need to have a new account. So to that extent, I think there is, similarity in terms of the legal requirements and the Sharia requirements. But having said that, that applies mainly with respect to some of the retail documentation. When it comes to corporate documentation, you may find that typically corporate facilities are negotiated with the parties. It can be based on a template, but when it comes to a customer with greater negotiating power or bargaining power, you find that the terms may be such that any changes whatsoever requires mutual agreement. So in that instance, even for rescheduling for corporates, there might be a need to look into the documentation to see whether or not there is a need to have a new document, or whether it can be done simply by way of notification, even in the context of rescheduling for a corporate transaction. I think the other point you mentioned about how that affects execution per se. Execution can be done in various forms and can be done for various purposes. If you're talking about for the purpose of meeting a CP, a conditions precedent, then you can have execution by way of electronic signature. So that's possible. But when you talk about the requirements for doing execution for the purpose of stamping, for example, or for the purpose of registration of the security with the relevant authorities, that might be a bit problematic, because typically those types of execution would require physical signatures, or rather wet ink signatures. It may not be possible to be done by way of a pure e-signing arrangement. So in that context, I think that especially looking at the need to ensure that the financing complies with the relevant CPs, there may be a need for some flexibility on the part of financiers in respect of these requirements, where the execution cannot be done by way of a wet ink signature during this period of time.
Okay, great. Okay, you saying that some of the documents are very much Sharia driven. Okay, and of course, when it is a Sharia driven document, it has to be endorsed by the SAC. So in this case, Dr. Engku, how often do you meet up to have these documents endorsed and approved? Or is it within the banks, or how do you go about doing that? Maybe Dr. Engku. You need to unmute yourself.
Yeah, you have to wait for the host to unmute me.
Yes.
Yeah, it's centralized control. Okay, so so basically coming back to the issue of the documentation and the verification that the documents comply with the Sharia principles. So this is actually the job of the Sharia Committee of the Islamic Bank. So the Islamic banks would have to consult the Sharia Committee on the verification of the legal documents. At the SSC level is more of approval of the basic actions that the Islamic banks wants to do. Okay, for example, Islamic bank wants to ask, can we restructure or we can only reschedule? Okay, so that would require the SSC to decide. But when it comes, so once SSC say yes, you can restructure, then they will actually, the bank will then actually go back to the Sharia Committee in order to detail out on the document side. And I believe I have friends who are sitting on the Sharia Committees, and they say that they are having meetings online, just like usual. So basically, the MCO does not really hamper the meetings among the Sharia Committees, and even at the SAC, I think at the Negara we have met during the MCO at least 3 or 4 times already, due to the urgency of some of the matters. So we have special meetings, including the regular monthly meetings. So we have done it via Zoom, via WebEx and whatnot. Okay, so we have a lot of mediums to actually conduct meetings and approve the document, the issues that have been raised. If not the documents, so the documents would be for the Sharia Committee to approve. I hope that addressed the question that you're asking.
Yes. Okay. Okay. Let's move on to the general perspective of the impact of Islamic finance. Okay. Safri. Okay. You know, CIMB is one of the top arrangers for sukuk. So how do you see the sukuk market? I think Tuan's side is very positive on the Islamic banking, Islamic finance institutions. But how do you look at the sukuk market?
Am I on mute?
Will you be affected? Yes.
Okay. So I think from our point of view, obviously this year is not going to be as exciting a year compared to the previous years where the sukuk market is concerned. We are seeing the widening of credit spreads as well as the yields. We are expected to see a lot of this, the widening of these rates to persist in the near term until we see some stability in the market. But having said that, when we look at the pipelines, the near-term pipelines, even going into June post MCO, immediately after MCO, if the MCO is going to be prolonging for the next month or so, we expect to see some interesting issuances coming out from the government-linked names and credits. And because they are government-linked and credits, that also address or answer some one of the most pertinent questions in terms of the credit rating that is going to be sought after by the investors. Investors in Malaysia, obviously, because of the issue that we are facing at hand, they would prefer to be a bit more defensive, and so we are seeing papers that are rated AAA with government guarantee names behind them being sought after by the investors in the near to medium term. So globally, we are also seeing the same phenomenon. I mean, the first part of the first half or the first quarter of this year, as we saw some interesting issuances coming from the Middle East, but that has taken, I would say, has been hit by the pandemic outbreak. We know that the market is going to be very quiet. Plus the fact it is Ramadan and the summer months are going to be hitting the Middle East market. So we are expecting a quieter market in the Middle East for the next 3 months or so as well. So all in all, this year that we should see a slowdown in terms of the total fresh primary issuances in the corporate sukuk market in Malaysia and globally. But having said that, because of the moratorium that the government has granted to various segments, including corporates, there could be some opportunities for corporates to tap into the sukuk market, especially in the shorter to medium term tenors, mainly the ICP and the IMTN format. That's all.
Okay, I like the word that you mentioned about opportunities. You see, when this thing happened, if you were to look from the positive perspectives, inshallah, there are opportunities. So from the CIMB's perspective, are you seeing new opportunities arising from this to basically to capitalize on it? How do you see that?
I think for one,
what are your basically taking advantage of the situation?
obviously, as I said earlier, the mission is to ensure that the market is calm. We need to basically create that calmness in the market. We need to provide certainty in the market. We need to assist our customers from consumer all the way up to corporates. So we obviously, the one area of opportunity in this new normal that we are seeing is on the digital banking. We've been talking about digital banking for the last couple of years now. So this episode has somewhat pushed everyone to expedite their thinking about digital banking, their push towards digital banking. We know for a fact that even the use of cash has been discouraged by a lot of people, simply because they're saying that cash can also transmit virus. So I think everybody's looking at e-wallets, everybody is looking at mobile banking, everybody's looking at digital banking. So that's one area that we are focusing on. We are embarking on quite actively on the consumer front, on the retail front, all the way up to SME banking and corporate banking. The other area that I mentioned earlier is on we know for a fact that some of the commercial and corporate banking clients are going to be affected by the COVID-19. I believe Tuan Syed earlier has also painted, the true picture of what is gonna be happening in the near to medium term. So we know for a fact that some of them are going to be impacted, and this sets of customers are obviously existing customers of banks in Malaysia. So it is important that banks in Malaysia, including CIMB, start to reach out to their customers. As I said earlier, know your customers better, understand the extent of this, the impact of this COVID-19 on the business of their customers, and see whether we can come up with possible workout solutions. And the workout solutions can be in the form of new facilities, can be in the form of new ICP or new IMTN, can be in the form of new fixed rate sukuk to the customers. Simply because we know for a fact that this will pass. But whilst we wait for this to pass, some of these clients are going to be having some difficulties, and this is the best time for the banks to show their, to prove that we care for our customers that has been with us for many years. So this is the best time for the banks to show that we are we care, we are a caring bunch of people. And we are a big proponent of sustainable banking, and more so for Islamic banks, to show that to distinguish ourselves from our conventional peers, and to assist those who are in need, during this difficult time. So those are some of the opportunities that we are seeing currently in the areas of digital banking, in the areas of short term, as well as ICP and MTN for the sukuk market, and also on the sustainability part and the CSR part, to assist our customers, especially our existing customers that are in need during this difficult period of time. I'll take a pause.
CIMB bin CIMB, very fast forward. Okay, I think in the interest of time, and before I open for questions from the audience, I would like to request each and every panel member to basically share their thoughts on what would be the new normal for the IFIs after this. I like the word new normal. Everybody's talking about new normal. So what would be the new normal for the IFIs? Maybe we can start off with Dr. Engku.
Okay, Bismillahirrahmanirrahim. Thank you, Zakariya. So I'm talking about the new normal after the MCO and also hopefully after the COVID-19. Firstly, I would like to say that I'm happy to hear or listen to what Safri was saying just now about the bank being open to CSR and all the things. Okay, so basically for me, the new normal for post MCO and also post COVID is for the bank to, especially IFIs, to actually think and work perhaps differently from what they used to before. Okay, because if you look at what Alwi has been mentioning earlier on, how the initial health crisis had then developed into an economic crisis. And then we have seen that it had impacted people in a lot of ways. But the severity of the impact on the people may differ. Okay, for example, if you look at the people, the normal people on the ground, we see that okay, can I continue? Yeah. If you look at the normal people on the ground, we see that there are some who are very much infected. They're very severely infected, like the self-employed, the business owners, the private sectors in general, because they have to stop business, and it's not just 2 weeks. It's now been prolonged to almost 2 months already, and we are not sure whether it will be further extended. So this has severely impacted the business and economy of mostly the private sectors and the self-employed on the ground. Maybe the civil servants are less impacted, maybe the employees and the salaried employees of GLCs and big corporations, they're not that severely impacted. But the rest of the people are severely impacted. So I think in this scenario, the IFI may want to play a role in helping to rebuild the economy after the COVID-19. So basically, I think the first thing that I think I should do differently is in terms of the mindset. I think there are some IFI who perhaps have a better mindset compared to the rest. Okay, some of the IFI, they still have the capitalist hat. Okay, they still have a very single bottom line kind of mindset. What they are concerned is about their profit margin. Okay, but I know for a while the central bank has been promoting the VBI, right, the value based intermediation, which is talking about the triple bottom line. So I think with this crisis that came after COVID-19 and after the MCO, I really hope that the IFI can fully embrace the VBI, embrace the fact that they cannot just look after their profit margin. They have to also look at the impact on the people and also the impact on the planet. If talking about the people alone, I think the best thing is for IFI to see this opportunity to not only look at the biggest profit margin, but a reasonable profit margin that can be further compensated by the fact that the capital that they have given to their clients have gone a long way to create new wealth, to create employment, to help the people to recover and also to rebuild their businesses after they have been impacted of the crisis of the COVID-19 and also of the MCO. So in a way, this will actually have this mindset of sharing or mindset of shared prosperity. It's not just I prosper, but we also want our customers to prosper in a more equitable or a more fair deal, terms and conditions, more friendly terms and conditions to the customer. Okay, so that's one thing that I want to highlight. The second thing is at the same time, I think IFI can also play a role at the higher level, at the government level, because I think at this stage, not only the people are having economic impact, I think the government is also facing economic impact as a result of the MCO and the COVID-19. I think Syed Alwi had mentioned earlier about the economic stimulus package. And then we have heard the Prime Minister mentioning about the every day of the MCO is costing economic loss of 2.4 billion per day. Okay, so we see in terms of economy, we have reduced income, reduced GDP, but at the same time, the government is expected to have bigger expenditure in the form of the economic stimulus and also aid to the people who are being impacted by the MCO and whatnot. So and because of that, I think the government will have fiscal deficit problems. So Islamic finance and IFI can actually help in terms of bridging that fiscal deficit, maybe through arrangement of sukuk issuances, maybe through private-public partnership initiatives. And finally, I think IFI can also play a role in bridging the industry with the people through the third sector, basically through the social finance, through the philanthropy and charitable sector or segment of the society. I think during the MCO, we have seen a lot of efforts made by the NGOs and also NGIs to facilitate aid to the people. I think there's not enough data that we have or research being done as to the volume of this money flowing through the NGOs and NGIs. So I think post-COVID, maybe we can have IFI coming in to coordinate these efforts and make it more systematic in order to have a zero cost of funds through philanthropy in order to help some of the segments in the society like the people. So these are some of the things that I think FI can play a role in that should be the new normal post COVID-19, inshallah.
Inshallah. Okay, what about Megat?
Okay, I think in terms of the legal perspective, in terms of the new normal per se, I think there are obviously certain things that change in view of the fact that we are currently under the MCO, and also even post MCO, there will be, I guess, certain issues that would arise. I think just looking from the MCO period, I think things that you can expect to be a bit different from what you used to do will be in terms of the requirements, for example, in terms of signing and execution of documents. That appears to be what we see in practice have changed, especially during the MCO period, where obviously there might be some issues with getting wedding signatures, getting delivered. So that's one possible issue that has arisen. And the other would be, I think, in relation to stamping. Obviously, no stamping can be done. I mean, you can do application for stamping online by way of the stamp system. You can also pay for the stamp duty online. But when it comes to the actual endorsement or the stamping of documents, has to be done physically by going to the stamp office for financial institutions and for law firms. And that would mean that essentially you can't get stamping done. Even though you applied for adjudication, you make payment, but in order to get it stamped, you need to go to the stamp office. There are some flexibilities for printing of the stamp certificate, but I gather for commerce firms that might still be an issue. In terms of, I think, just legal disputes, I think you may note that there have been a move towards doing online hearings, at least for certain chamber applications. Hasn't moved on to dealing with online trials, but I think slowly, I think there's a realization that the longer the MCO continues, you need to do something about the disputes that are currently filed with the courts. So that particular area, there's also some changes, and that would also impact obviously banking disputes. But overall, I think just looking at Islamic finance generally, I think it's just, it goes back to this point. I think this common principle, that is that in times of adversity, you'll find that there will be the retest of one's character. And I think that this is also an opportunity for Islamic finance as a concept, as embodied and practiced by institutions. I think the fact that you have the MCO, hopefully there will be something positive that would arise from the role that FIs can play in relation to Islamic finance, from the role that the Sharia boards can play in relation to how it can help alleviate the problems that are faced or hardships faced by all sectors in relation to the MCO and the economic effects of the MCO. So hopefully, I'm heartened to note that CIMB, for example, has taken a very steps towards ensuring that these particular hardships will be looked at empathically with the institution. I think that kind of approach is important because, as you may know, based on the Quranic requirements and the Sharia injunctions, there's a need to, when it comes to financial hardships, for time to be given to a debtor to pay their debts. What I've not seen so far is the other part of the injunction, which is that where possible, there's either waiver in full or in part of such debts. I think what you find is for some institutions, not CIMB, is that there's a tendency to look at it, okay, now that we have a moratorium, how can we make some additional profit out of it? So hopefully that might change, I think, in terms of mindset, as mentioned by Dr. Engku.
Okay, thank you, Jim. What about Tuan Syed? Yes, Tuan Syed.
Right. Thank you. So I'd like to make 2 points here regarding the new normal and the impact of Islamic finance and potential growth of Islamic finance. Yeah. The first point is, again, Islamic banks will have to adjust to the new normal, just as society also adjusts itself to the new normal. There are going to be changes to the lifestyle of people, changes to demand behavior, changes to consumer spending patterns, and likewise, there will be changes to credit and investment appetite. Banks will have to quickly realize and meet these changing trends to offer financial solutions that meet these changing demands. And in doing so, they should not focus on profit maximization objectives alone. They should also think about what is good for society and the environment. Yeah. So I fully echo what Dr. Engku mentioned, the 3 Ps. Planet, people, and profit. Now, for instance, let me give an example. Let's look at the agriculture sector. It's a sector that I'm very fond of, I'm very passionate about, and I used to lead an organization involved in this agriculture sector. One of the issues that we find is, and in particular, the agro-food segment. This segment has been largely avoided by high street commercial banks, simply because of the high inherent risk. The risk of external factors, external risks, and also high operational costs. Now, because of lack of access to credit to the agriculture sector, Malaysia, as an example, has ended up importing large chunks or segments of our food item for local consumption. Malaysia imports more than 50 billion ringgit on an annual basis for food items that we put on our table to eat. Now, with the global supply chain and trade disruptions that I showed in my first slide, the ability to import these food items may even be broken further. If the global supply chain is broken for very long, we may have food shortages for certain food items. Malaysia has not reached that stage yet, but that is the risk. If we prolong this containment, and if banks do not provide access to credit on food production. And I've just given agro-food as one example. The point is this: it is time for Islamic banks to provide and mobilize capital to drive social progress. This task cannot be simply brushed aside as a role for dedicated development banks alone. Islamic banks need to step up and make bold decisions on how they can contribute towards rebuilding the economy. And this may not necessarily be debt-based financing per se. Islamic banks will have to lead the way now more than ever to venture into musharakah and mudarabah-based financing. Banks may well set up equity funds to invest into their clients who are now facing financial difficulties or who may have already defaulted on their financing or about to default and having financial stress. This will obviously come under different setups, entities. I mean, banks may not be able to take equity risk, but this can be arranged. This needs to be arranged. This needs to be explored with the board of the banks and with the central bank. Islamic banks need to step up their game. Secondly, what I see as an opportunity for Islamic finance, and this was also echoing what Safri had to say, regarding the sukuk potential. Now, governments will try to rebuild their economies in the aftermath of this crisis. The issuance of sovereign bonds will rise as a result of governments relying or tapping on the debt capital market to fund the rebuilding process. This may be an opportunity for Islamic finance and sukuk market to offer attractive solutions. The pipeline was mentioned by Safri, but what is not yet in the pipeline is what is more interesting. A lot of governments, especially governments which were alien to Islamic finance before, such as Hong Kong, UK, have already embraced and adopted standards and legislations for the issuance of sukuk. They will be ahead of the curve. They will be able to take advantage of this. But the likelihood is that there will be other newer sovereign issuers for sukuk, provided there is sufficient liquidity in the Islamic capital market to meet this supply. This is going to raise the sukuk industry and an opportunity for Islamic finance to prove that sukuk is not just a debt-based instrument. It is in fact a social impact instrument. So basically, Islamic banks have a huge upside opportunity to rise to the occasion and prove that the real value proposition of Islamic finance during this crisis. They have a social and moral obligation to get money flowing into the economy and explore more of risk participation structures in designing products and solutions as we rebuild the global economies. Thank you.
Thank you very much. Okay, Safri.
I think a lot has been said by Dr. Engku, by Megat and Syed. I just want to echo what I think some of my distinguished panelists have said earlier, and also what I've said earlier in terms of digital banking. That's something that is being pursued actively now. I believe this COVID-19 has been a blessing to some extent. I don't believe I'm saying that, but obviously to a lot of people who are working from home, it could be a blessing. To all of us Muslims, it is a blessing having the opportunity to basically celebrate Ramadan with the family, perform Jama'ah prayers with the family and whatnot. So that's a blessing to everything in life. And we are seeing that, especially during this Ramadan month. So coming back to this new normal for the banks, not for the individuals. Digital banking, I mentioned about the cashless society that all of us have been embracing over the last, 4 weeks or so. All these online platforms are thriving. I was just reading something this morning that Instacart is hiring 250,000 people. Because of the demand in the online grocery shopping platform. So we're seeing that in some of the other so-called platforms, from Lazada to Shopee, Shopee to Faith and the other platforms. And also on the, when it comes to delivery, is what we are seeing a lot more delivery companies mushrooming. The existing ones are doing very well now. It is thriving. So this online platforms is going to be here to stay. That is the new normal that we are seeing. Obviously, we do not have a crystal ball to predict the future, but the near future is something that we can see. So that's something that we are going to be embarking on in the near future. The online banking, the contactless payment methods, and also to accelerate the adoption of mobile payment mechanisms throughout our banking platform.
Okay, thank you very much. It's just that I like just to wrap up. I think the key here is like Dr. Engku and Tuan Syed was saying that banks should now consider the social and moral aspect of it, in terms as what Dr. Engku is saying, that let's forget about the capitalist head. Let's talk about assisting the customers. So that's one thing. Another thing, the takeaways from this, I think Safri mentioned about e-wallet, which actually has been going on. So I wouldn't say that it's a new normal. It is a normalized activities now. So I think we have time for questions. On that point, I would like to open for any questions from the audience. Is there any live questioning? Otherwise, I'll go to this question received from the group chat. Okay, this is from Yusuf Halik from Singapore. And the question is specifically to the CIMB CEO, Mohamad Safri. What is your short-term and long-term outlook on precious metals due to COVID-19? And secondly, is the outlook for fixed deposit rates for CIMB as it has been dropping? So, Safri.
There's no free lunch, right, for all of us. Obviously, it's Ramadan, so there's no lunch. So these are very, very difficult, interesting questions from Encik Yusuf Khalid from Singapore, I believe. So
Yes.
the first question, no one has a crystal ball to predict the future. When one talks about metals, they are metals and they are metals. And when I believe, what was it, Syed mentioned about the advent of this COVID-19, that started in December, I believe, last year. So we saw a lot of pictures coming from China. For example, China has been extremely active in terms of the industrial side of things. But because of COVID-19, everything has slowed down. The river has turned blue. There's no more pollution. And same thing when it comes to metals. The demand for metals have also depleted, has also come down. So as a result, the price has also come down. But now, because China is reopening, we are seeing, Wuhan and some other parts of China is reopening, and China is a big, big market where metals are concerned. So the markets, you look at all the research reports, the markets are predicting that the demand for metals are going to be picking up again, at least from the 4th Q of this year. So it's anyone's guess when it comes to metals. The one metal that has attracted a lot of attention is gold. So I'm not so sure whether Mr. Yusuf is actually referring to gold as one of the many, many metals. So gold has also been thriving in terms of the pricing. I mean, everybody's projecting that the gold price is going to be hitting 1,007 anytime soon. And that is also partly because of all the measures that have been made by the central banks and the government, the rate cuts by the banks, the fact that gold has been a natural hedge for recession. So whether recession is imminent or not, I used to remember one person used to tell me that if you want to see whether we are going into a deeper kind of a trough, then you look at the gold price. If the gold price is actually thriving, then we know that something is not right. So I'm not so sure whether that is a sign, but it seems that the gold price is going upwards at the moment. So that is the outlook when it comes to gold price. The second part of the question, again, when it comes to the rates, is a function of the liquidity of the bank, and so at the moment, if a particular bank is flush when it comes to liquidity, there's no need for them to lowball on the rates. Lowballing on the rates meaning to basically pay higher to attract deposits. And as we discussed earlier, the Malaysian banks are quite flush when it comes to liquidity, even at this stage. And Bank Negara has also committed that it will continue to provide daily ringgit liquidity to Malaysian banks. So liquidity-wise, we are quite sound and ample. And at the moment, the rate that we are offering to the market is a market rate. And if you look at obviously customers will shop around for the best rates amongst the banks, and the rate that we're offering, at least in Malaysia, is a competitive rate amongst all the banks.
Thank you very much. I have your questions been answered. Okay, the second one, actually, I received it on my personal WhatsApp communication. Okay, this is from Hilmi. I'm a customer of a local bank and have applied for my credit card's outstanding amount to be converted into term loan. Unfortunately, my application was rejected because my credit card is under Islamic Bank. So, the question is not complete, but I just want to know, can an Islamic credit card be converted into term loan? And anyone, maybe Dr. Engku, is it out, or the banks? because it was not stated whom he basically posted the question to.
If I may pick up with the question.
Sorry? It's a Sharia compliant credit card. So he approached a bank to basically convert it to term loan, as what been announced by the bank. Unfortunately, the bank came back and said that by virtue that this is an Islamic credit card, so you can't, I don't know, I'm not so sure as to whether term loans are only meant for conventional or.
Do you have to take it out, Safri, or you want me to?
Sorry?
I thought Safri wanted to take up the question, or no? No, okay. I just want to, because the question is saying that the person wants to convert his obligation or debt under the Islamic credit card into a term loan.
Yes.
I don't know which bank that the person is talking about. Maybe I have the feeling that the bank may be a bank which is offering both Islamic and conventional. So maybe there was a kind of misunderstanding that he wanted to convert his so-called Islamic credit card debt into a conventional term loan, which is why the answer received is he cannot do that. But I believe if he mentioned clearly that the Islamic credit card debt will be converted into an Islamic facility, then that I think would be doable, because the person can have like a kind of Islamic personal financing or other Islamic facility where he can actually obtain some money from that facility to pay off his credit card debt. So then he would have a better ability to pay under the new facility, because as we know, for Islamic credit card, the profit margin is high as compared to perhaps a normal Islamic personal financing or other facilities. So maybe the way the communication was done may be causing confusion that he wanted to convert his Islamic facility to a conventional one. But if he's converting his Islamic to Islamic, I don't think that there is a problem. And this, I think, is offered by a number of Islamic financial institutions. Maybe if Safri wants to add on that.
Yeah, thank you very much. Okay, I've got one more question, I think, because we are running out of time. One more question from Dr. Noraini Marifin from IIUM. Okay, the question is, Tuan, Syed, Alwi and Cik Safri did mention about the relaxation of ECL by Basel Committee. Does that mean the bank in Malaysia, including Islamic banks, are not required to provide the provisions from day one, especially during the moratorium period, in particular for accounting purposes? Noraini from IIUM. So, is it the Tuan Syed or Cik Safri?
I think Safri mentioned some of the relaxations that Bank Negara has already offered to the banks. Maybe Safri can just take up this question.
Okay, let me take that up. I think if I were to read the Bank Negara circular dated March this year, the moratorium period is excluded in the determination of the period in areas for the purposes of regulatory and accounting classifications. That's number one. The loan financing need not be reported as rescheduled and restructured, or RNR, in the Central Credit Reference Information System, or Securities. And number three, the RNR loans and financing need not be classified as credit impact and Securities. So from day one, there's if the facilities are not overdue, for example, since the moratorium starts from the 1st of April, so on the 1st of April, if the overdue period does not exceed 90 days, then the bank need not, each of the banks need not classify this under rescheduled and restructured in the Securities, as well as the RNR financing need not be classified as credit impact in the Securities. That's the second part of the question. The first part that I was trying to answer, but because I was on mute, to echo what Dr. Engku said earlier, there's no issue for the customers of a credit card in any of the banks in Malaysia to convert their credit cards into term loan or term financing. But if I were to clarify that a bit more, should you have a conventional credit cards the natural thing to do would be to convert that to conventional term loan. And likewise, if you were to have an Islamic credit card, there's no issue whatsoever for you to convert that into an Islamic credit card. And the term is as per what Negara has communicated to the banks, that the tenor of the term financing or term loan should not exceed 3 years, and the effective interest or profit rate should not exceed 13% per annum. That's all.
Okay, I think we are running short of time. I think I would like to have one more question, in the sense that this is, I received it from the group chat. Okay, the question is deposits, it's about deposits in investment accounts. They say that if such deposits are drained, liquidity risk for banks is greater than risk versus the capital buffer. So this Rafiuddin Abu Bakar was asking some comments from the bankers on liquidity risk. Can the host unmute the speakers?
Yeah, I was trying to answer the question. I think investment account is an extremely compelling proposition to the banks, and I would appeal to every single Islamic bank to look at investment accounts, not only for individuals, not only for good times, but also for rainy times. I believe either Dr. Engku or Brother Syed mentioned about this, right? We can also use investment account to help companies, to help commercial or corporate clients to fund their capex or even their opex or even their working capital. That's something that a bank like CIMB is looking at, and we're hopeful that we can get that out by Q3 or Q4 this year. So going back to the draining of the deposits, right? Whether we're doing an investment account or non-investment account, which is guaranteed by the deposit insurance company, it does not matter. At the end of the day, if the customers are looking at withdrawing the deposits, they will do so. So the challenge for the banks and for the central banks is to make sure that that does not happen. That's what I said earlier, that the first thing that we have to do to keep to our mission is to calm everyone down. And what the government has been doing since last month by the stimulus package, what Negara has been doing by giving the moratorium and so on and so forth, by providing daily liquidity to the banks, are excellent measures to make sure that everyone is calmed down. And we are seeing the initial result of that measures in the banking sector in Malaysia. We are not seeing any panic withdrawals by the customers. In fact, the liquidity position in most of the banks in Malaysia are intact. We are, from our point of view, we do not see that being an issue in the near to medium term. Obviously, the other caveats that I have is how long this MCO is going to be prolonging, number two. What is the impact to Malaysia post-MCO? So those are the things that we are still assessing. That's why it's important that we stay close to our customers. This is the third time that I'm saying this. Know your customers is the most important tagline, and that there's no better time than now.
Okay, thank you very much. I think time has come for us to postpone, or how shall I say, to put it to stop to this discussion, because I think it can go on and on and on. Okay. On that note, on behalf of the organizing committee, sir, I would like to thank the panel speakers who have basically contributed a lot and new, new informations and what you call it, you share your experience kind of thing. So on that note, thank you very much. Assalamu alaikum wa rahmatullahi wa barakatuh.
Thank you.
Thank you very much.
Thank you very much as well.
Ramadan Karim to all.